The currency war debate heats up. The Swiss franc and Japanese yen slide to new lows and down through key levels. And no Christmas cheer on the UK high street. Pretty dismal retail sales figures for December are out today. But let's start with those currencies and the yen and Swiss franc. Out now to Jeremy Stretch, Head of FX Strategy at CIBC. Jeremy, let's start with the yen. Dollar yen's gone through 90, the big round number 90. Now that's a 12% rise in only a couple of months. Are we seeing irrational exuberance at play here?
Well, clearly we've seen a rapid move in regarding the yen over the course of the last few weeks, in particular as we ran into that December election and the change of government with Mr. Abe coming back into control, and the sheer desire that he has and that he ran through his election campaign to try and end the spectre of deflation in Japan. If that's going to be the case, and if the BOJ are going to adopt a 2% deflation target at the beginning of next week, then that really implies significant need to further weaken the yen, to raise import prices. And that, of course, does suggest that we are going to see further topside momentum, potentially. Mr. Hamada, his economic aide, has talked about 95 to 100. I think it's going to be difficult to see a straight line move there, considering the appreciation we've already seen, particularly with fiscal year end over the course of the next couple of months. But I think it is still going to be the case that path of least resistance is very much biased towards a weaker yen. You mentioned there 95 and 100. So when can we expect to see the next 5 and then 10 big figure move up? Well, I think in the short term it may be rather difficult to get much beyond the sort of 92 area. I think that might be an opportunity to perhaps pause for breath as we go into the fiscal year end. And I think that's going to be an interesting sort of byproduct here, that of course we do get that fiscal cut off at the end of March, and we do usually tend to find that we get repatriation flows to rebuild balance sheets during that period, which is moderately yen supportive. I think into the new fiscal year, though, as we get the new BOJ governor coming into office, who of course will be chosen by Mr. Abe and his officials, then I think into the start of the second quarter, that really provides further opportunity for a weaker yen bias. And so I think those sort of 95 to 100 levels will be very much in view as we start the second quarter. OK, and if anything, the move up in Euro Swiss has been even more dramatic, 4% in a week, and this week's move up is the biggest weekly rally, the 7th biggest on record. It's no surprise that we're seeing some profit taking coming in now. Yes, that's right. It's not surprising. We've seen a degree of profit taking. After all, the scale of the rallies you've mentioned is relatively unprecedented, certainly in recent times. And getting north of 125, which again is another big psychological level in the same way that 90 is in dollar yen, it's hardly surprising that people are looking to book some profits. I think there are some concerns that maybe the SNB would consider raising their floor of the exchange rate target up to 125. I think that's unrealistic at this point. I think there are still plenty of caveats to the euro story, which I think will preclude the SNB doing that at this particular juncture. But nevertheless, if we are going to see further euro gains, at least in the short term, and I think that may well still be the case, I think euro dollar may well have a move up towards those 2012 highs, then that may well provide a little bit further in terms of upside risk as far as Euro Swiss is concerned beyond the near-term profit taking. But I think once we get into a level with 126, maybe up towards 126.5, that would be a very good level for investors to start to fade those rallies and look for a reversal back, particularly as euro negativity may well start to come back towards the end of the quarter. OK, Jeremy, thank you very much and have a great weekend. In today's Deal Zone, or not quite yet Deal Zone, Glencore has pushed back the date for completion of its tie-up with Miner Xstrata for the second time. The commodities trader cites competition probes in China and South Africa for the delay. Glencore says its long stop date for finalising the $33 billion deal will now be March 15th. The shares in both companies taking the news in their stride today, both essentially unchanged on the day. Under the macroscope today, and hoping for a Christmas boost to the UK economy, think again. Retail sales actually fell in December from November and grew at their slowest annual rate since April. The pound slipping further below $1.60, that's cabled down some 1.2% this week, its biggest weekly fall since July last year. That was today's Market Pulse, but tune in at this time every weekday for your fix of what's moving on markets and why. I'm Jamie McGeever, this is Reuters.